Hey guys, it's Nick and Jeff. Today we're going to talk about, are you filling your tax bucket? Clients have never said that to us.
No.
But they've said things that make us think this way. A couple times in the past few weeks we've had questions like, am I taking advantage of today's tax brackets? And how can I leave more money to my named beneficiaries? So we thought we would do a little video. We call it Filling Your Tax Bucket. So today we're going to kind of get laser focused on some taxes within financial planning. As a disclosure, we are not CPAs and we do not provide tax advice. So please consult your tax professionals or CPAs. We'd love to work together with them to make sure that we're all on the same page about your plan. But for illustrative purposes, we're going to talk about a married couple in retirement in the 12% tax bracket.
12% tax bracket is
$19,400 to $78,949. It's a pretty big one. It's almost $60,000. For illustrative purposes only, let's say our married couple is making $35,000 currently, and their IRA has $500,000. The first thing we want to do is we want to trigger that taxable event, and we want to get money out of the 401k. And let's just say that we want to take out $40,000 per year.
so $40,000 plus the current $35,000 that they're making will bring them close to $75,000, or in essence filling up that 12% tax bracket bucket.
Perfect. So in my mind, clients really have a couple of options once they take that money out. Walk us through kind of two potential options that clients have.
Besides spending the money and enjoying their lives while they're still young, the first thing that they can do is put the money into a Roth IRA, doing an IRA conversion to Roth, which is excellent. Or they can just utilize a normal investment account and have an after-tax investment account with stocks, bonds, mutual funds, whatever the investment may be.
And I think at the heart of it, the clients who have these types of questions or this planning comes into play is they really have a legacy mindset. How much can I leave to my children? What's the most efficient way to leave money to my kids? So let's say that this couple passes away, Jeff. Walk us through what happens to the money at death.
So in the investment account, for example, the children or the beneficiary will receive what's called a step-up in cost basis. So as we were putting money into that and filling that tax bracket up over years, let's say we were able to liquidate that full $500K out of the IRA, pay the taxes on it, and move it over into the investment account. But of course, those investments, hopefully over time, are going to grow. And if
not guaranteed.
Not guaranteed.
But they should.
But if they grow to a number, and let's just use $1.2 million as our number, when the owner of the account passes away, the beneficiaries would receive those dollars and would also get a step up in cost basis. So that $700,000 in gains that was unrealized will be erased.
So that full $1.2 million goes to the named beneficiaries.
Basically tax-free.
Tax-free. A little bit of taxes today at the lower tax rate could leave a lot more money to the beneficiaries. Talk a little bit about the beneficiaries tax bracket and how that really starts to plan into this. I'll give you an example, Jeff, and you fill in the blanks. So let's say the daughter is going to inherit the money and she's a doctor making $300,000 a year. How would this impact her?
Yeah, so we know that the 12% tax bracket ends at close to $79,000. Every dollar above that is going to be taxed at a higher rate. It jumps from 12 right now to 22, and then all the way up to the top tax bracket of 37. So if our clients later on in age, their kids are 20, 30 years younger than them, potentially in higher earnings, potentially at higher tax rates because we are at historical lows, every dollar that gets passed on to that beneficiary would be taxed at a higher rate as they take it out and put it into their pocket.
So the daughter, if she inherited the money at her tax bracket, she might be in the 30% tax bracket. So if mom and dad can pay dollars in the 12% tax bracket, there's a huge potential savings there for the ultimate beneficiary.
You got it.
So that's just a little bit of how investments and taxation come into play, and they work together hand in hand. And that's why it's important to take everything into account in building your financial plan. Thank you.